to give you kind of a sense that it's not just day trading that we do at DayTradeToWin. You can also swing trade. We like to use the Blueprint software. And the Blueprint software in the past was only taught manually how this works. Recently, I got this coded, and it actually works really well, especially with swing trading, which is hourly or daily or weekly, stocks, especially if you trade stocks or you're a long-term trader. So the way that this works here, this is the Blueprint software. And by the way, yes, it does include the software with the mentorship. It's all inclusive, so you don't have to buy anything else, or it's not separate. We try to include as a package all the software and courses with the accelerated mentorship or the regular mentorship class. So just so you know, there's no extra charge for any of this stuff. The idea behind the Blueprint is really looking at whether or not there's a move, a pause, and a continuation. And it's easier said than done, because that's so subjective to say, do we have a move? Is it the market stalling, or is it, and then is it continuing? So we have to really think about how this works here. And I'm looking at an idea where first we have some type of movement, either up or down, and that's why the boxes are red, because the trend is down and the market is heading lower. And if we have an uptrend, then we see here the market or the shaded boxes are blue, right? So that's the first thing. Do we have a move enough, not just a channel or a chop or a range? It's got to have some type of move. That's part one. Part two of this is, will the market get stuck? And so you can see here the shaded areas indicate where the market is showing some type of range or stuck, and there's rules that go along with that as well that we're looking at. Why does it get stuck? The next part of it is very simple, and it's the breakout. So where I look at the breakout is whether or not the market either closes, let me just show you here, closes below or closes above, right? So really simple. Will the market close above or below? Now, in its simplest form, think of it as a breakout. But I really have to say it's not that easy, because if you think about the breakout, what if we have a candle that closes, a huge candle, which is a candle that closes like this? Do you think that it's a good idea to go short here when the market is coming from here? What do you think? Keith, what do you think? Or Colin, or Bob, or Steve? If you guys are more advanced or intermediate traders? No, absolutely not. Oversold, overbought, overextended. You're the last guy selling the market. It's a terrible idea. So there's a part of this equation here which is indicating that if we are going to take one of these trades here, either long or short, should the market close past a certain point, or should it go past a certain point? So in the software itself here, I've added above and beyond a filter, which is the maximum distance the market could move. And I can't tell you how important this is. So we can eyeball it. We can say, it doesn't look as if it's really going and breaking out that much from where it's coming from. But in reality, it's all scaling. These prices that you see here, they're all relative. So if the market moves more than 1.5 times the distance away from this area, there's no trade. And you can adjust this based on your risk tolerance. So let's say that you don't want 1.5 times the distance. Let's say that you just want 1 times the distance. Well, it would make sense that you'd have less signals, less trades, but they'd be better trades because you're entering right at the beginning of the move breaking out above or below. That's number one. Number two is if it fails, then the risk is less, because if it reverses or if it just flat out is a losing trade, you have less to lose. So always avoid, again, some of you may already know this. I see a lot of my traders here in the room. But remember, if you're going to take a trade, it should always be as close as possible from the beginning where it's coming from. The idea of taking a trade after it's made a big move is dangerous, because we don't know how much further, or if the move is over at that point and we're entering late to this. So I always try to explain the rationale of why we're doing what we're doing. The same thing here. So if I put this to 1, you may see some of these signals disappear because it may be too far away. So I'll put it to 1 here. And so this signal is going short. It's coming from this area. This signal is going short. It's coming from, there's another shaded area happening right here, right away. So it's almost at the beginning. You don't want to enter short here based off of this information. This area short is based off of this larger shaded area. And let me see if there's any more for today. So that was a long. Okay, so if you take a look at this example, it's a perfect example. So for those of you who are who have traded in the past, you would see this signal here, and you'd probably say, okay, moving averages have crossed, momentum is down, MACD is looking good. All of the indicators that are the conventional stuff that exists out there, which is, I think, useless because it's so much optimization involved with it. This is all telling you to go short. But if you realize that this candle is based off of this information, when you enter here, the move may be already over. And that's the purpose for this opportunity, to say the maximum distance that I want to see an entry or a signal or an opportunity to be a seller or a buyer needs to be maxed out at a value. So the maximum distance multiplier here, it's more than 1 times the distance of this box. So here, if I put it to, let's say 2, I don't even know if that would, yep, that would be enough. So this would be 2 times. So I think 2 is too much. I think 1.5, which is the defaulted setting, or 1, and we include live training with this anyway, so everybody gets the training to understand how this works, would be the maximum that I would put. I believe that even using 1 is much better. And you also have an opportunity to say, how many candles do I want to see close before the signal? So I have it set to 1, but 2 candles would be good enough. So if this is 1 candle, it gets you in right away. The second candle, if you have it set to 2 or 3 or 4, I like 1 or 2 personally. And this is a daily chart. As a day trader, the settings are a little different, right? You need more candles, maybe 2 candles before confirming to go long or short. So day trading and swing trading a little different. You have to approach them separately. All right. So this is the Blueprint software, also included with mentorship, and where you can get it separately. Okay. This is the Micro E-mini, and I have some requests here for the Trade Scalper. Let me just bring up a Trade Scalper chart. Okay. So the Trade Scalper, really popular. Yep, Mary, you can. The Blueprint, you can just give us a call. I'm happy to give you a discount as well, Mary. If you're a current client, I always give discounts to our current clients. So just send us an email. I'll send you a coupon code. All right. Now this here, right over here, is the Trade Scalper. Really popular. I would say that most of the traders I work with really like the Trade Scalper software. Now, is it perfect? No, of course not. I don't think there's any holy grail software. And that's where you have to take it to the next step. You have to understand that if you're going to take a trade, first thing is, what's the risk? Second thing is there anything conflicting? Where am I entering? Is the trade over yet? I mean, these are questions you have to ask. Now, I'm using a 1 minute chart, but this could be used on a range chart. It could be used on a tick chart. It could be used on a 5 minute chart if you wish. And so the Trade Scalper is a great piece of software. It's very popular. Now this is today, right? So as an example, these are all the signals. There's nothing optimized. Here's the back end. There's no values. A lot of software that you see out there, there's a value. So today you have some value of 10. Tomorrow you use some value of 20. The next day you're back to 10. So there's nothing like that. The Trade Scalper, which is right here, the Trade Scalper only offers a few options. Do you want to see one trade or multiple trades if they're happening in concession? Do you want to see this extra signal called show double wick? And do you want to filter out signals based off the ATR? If the ATR is too slow, there's no signals because it's not worth trading. And that's it. There's nothing else to it. And that's what makes the software really cool, because any market that you trade, you can get pretty much the same results. Crude oil, NASDAQ, E-mini, micros, Dow, it all works the same way. Now, some markets work better than others, obviously, but if you look at today, this is the E-mini. This is exactly what you see. If I change this to the micro, so I'll do the MES, micro, you're going to see very similarly the same opportunities, the same signals. NASDAQ, Dow, crude oil, it's really, really good. So as I look at this signal, the one thing that you have to remember is after this short signal appears and the market makes a big move and you missed it, or you weren't paying attention, or you just couldn't get in, the market's too fast, and especially right as the market opens at 9:30, I don't think it's a really good time to trade, because it gets very strong, very chaotic. My advice is not to trade right as the market opens. So an example like this, I wouldn't bother with this trade. I wouldn't chase it. I don't want to be in it. I want to let it go. Then you have a follow-up signal here about maybe 10, 15 minutes later, and what happens? There's a signal here to go short, market retraces a little bit, and then gets you where you need to go. How far was this move? 6 points. I don't think I want 6 points, and I can't expect it. Again, if you ask me what I can expect, if you look down here, 4 points, 4 3/4 of a point, 4 points, 5 points. So use what the current conditions allow you to take. Even be more conservative. You don't have to take the full 4 or 5 points. Take 2, take 3. You don't have to go crazy with this. Here's another signal here. What can I expect? The ATR is about, again, 4.5 points, 4 3/4. How far did the market move from this entry? It moved 4 3/4. It moved exactly this value. The importance of using a tool like that, knowing exactly the target, what type of stop, how I'm going to approach it. Is it too slow? Is it too fast? It's vital. Okay, now again, I have to say, not every trade is going to be a winning trade. Today just looks great, where the market just kept on giving you signal after signal. If you take 3 or 4 of these a day and stop, I think you're way ahead of the curve. You're more than 90% of the traders that are out there trading 100 times a day. Here's a losing trade. So you can see it's not perfect, and there's a losing trade there. Okay. You can recover. You can recover more. You can recover again. You can recover again. And now you're doing awesome. Uh-oh, a losing trade. Okay, we're back to recovering. No problem, we've made our money back. Now, again, 3, 4, 5 trades a day, stop. There's no reason as a day trader that you should be trading 50 times a day, because really what you're doing is you're making your broker rich, right? Trade less, but trade, I think more accurately. Pick and choose the signals, and especially when it comes to putting it all together. And I'll give you another example. A lot of traders say, well, how do you put this all together, right? You sell a few different types of software, right? The Atlas line, the Trade Scalper, and so on. So putting it all together, let's say that, let me just remove here, that you have, and some of you do have the Trade Scalper and the Atlas line, just 2 pieces of software, or you have all of the software. So if I added here the Atlas line, and to see if it aligns with opportunities using the Trade Scalper, we are indicating short, and we're going to stay short. The Trade Scalper is saying short, I'm only going to take short trades. Here's a long trade, maybe I'll filter that out. Maybe I don't have to take this long trade because I'm only focused on short trades. So you can see there are ways that you can definitely pick and choose the signals. You don't have to take every signal. There's a lot of signals, right? Now, if you take a look at for example, a strength trade, just as an example here. I'm just picking this one out here because it looks for the example. This is all telling me strength, strength, go short, go short, go short. And then you have a short signal on the Trade Scalper. Completely unrelated. The Atlas line has nothing to do with the Trade Scalper. Both signals are telling you short. If you ask me, should I take this short? I would say 100%. There's no reason for me not to. There's more than one method unrelated that is telling me to buy or to sell at the same price or the same area. So the double wick signal, Bob, is based on a different type of criteria. So the short signals occur based on a criteria, and the double wick also occurs based on a criteria. Now that criteria is taught in the course and in the program, so you learn why and how that works. So if you want to learn how that works, feel free to visit DayTradeToWin.com. You can learn all about the double wicks in the Trade Scalper course. It's based off of the wicks, how they work in relationship to the method. Sometimes we just have wicks. And so what does that mean? Well, it means something. Absolutely, Colin. So Colin has a question here. So that signal would have been missed as it moved too fast. Absolutely. So if you take a look here at this particular signal, if it moves too fast and you have a situation that you want to go short because it just moves too fast, we have additional, these S's and the follow-up S's are all telling me to continue short. There's nothing here telling me to go long. So what I look for when we start aligning the methods together, if I miss it or if I miss one and if I see this one and then there's a follow-up, it's really all related. This happens within 4 minutes. If you take a look at this signal, well, 3 minutes, 11:17, and then this over here at 11:22. It starts off at 11:20. This is between 4 or 5 minutes. It's all telling you to go short. And that's what I look for. I mean, maybe it's not all going to happen all within the same second, but they're all indicating to go short at the same time. So I'll see if I can find another example where that happened. So right here. So here's the pullback trade to go short, and here's a strength trade to go short. So you decided not to take this. Maybe you weren't ready. Even though you had that, and then you have that. So if you ask me, there are only short opportunities here that exist, and that's what I want to see. I don't want to see a long and then a short and then a long, because that really doesn't help me understand what's happening. I only want to take a signal where it's absolutely clear. Let me see if I can find another example for you, Colin. So how about this one over here? What do you think about this one here? Right here. So here's a signal to go short the strength trade at 117, and here's a trade scalper short at 1318, which is 118, happening at relatively the same time. And I don't know if I could move that. Yeah, I can. So here is the strength trade pattern, and here's the signal. So maybe we'd look for something more accurate like that. Okay. You have to turn them on, Colin. Do you have the Atlas Line software, Colin? So if you look at the back end, make sure that the S's are turned on. So I'll come here, let me show you. You should have taken the live training, and it's also in the manual and in the oh, you have the Trade Scalper. Wait, so the S's are the Atlas Line. So the S's are the pullback and strength trade are part of the Atlas Line. Okay, so they're different software. So if you'd like to learn more about the Atlas Line, just give me a call, or send me an email. I'll send you a discount code as well. All right. All right. So let me see here. Colin answered your questions. Okay. Let me see here. Did I miss any questions at all? Here, Bob. What double wicks on the Trade Scalper? Jatinder, is there a currency that you want to see, Jatinder? Anything specific? I'm happy to show it to you. Or any market that you guys want just to see. British pound. The British pound is only worth $6.25, my friend, right? In comparison to the euro, which is $12.50. The Canadian dollar is $10. Now, if you're trading the futures market, that is, okay? Just to let you know, the British pound is worth less. So the British pound. See if I can do 6B. British pound. So this is the British pound, and British pound here. Okay, so British pound started off with a short signal. And then you have this is the trade scalper to go short, and then you have these P's and the S's. Then you have a long, then you have a long here on the British pound, and another long on the trade scalper. You have a short, again, a trade scalper. So the British pound, okay for today, not great. But that would be the British pound. Mary, NQ, NASDAQ. And micro or just a regular NASDAQ would be, let's take a look here. NQ. Let's see what that looks like. Now, I haven't seen any of these. So just to let you know, these are requests from everybody. Okay, so here is the NASDAQ. So it's very similar because the equities typically move up and down together typically. So they're very similar to the E-mini S&P. So Mary, this is the NASDAQ here. Hey Sat, I'll bring back the daily chart to show you. I was working, I was showing everyone the daily chart a few minutes ago, but I'll bring it back for you. Mary, this is the NASDAQ. So what we have here on the NASDAQ is the market just continuing to go lower and lower, and the short signal started off, and then you can see there's no longs at all on the trade scalper until about 12:45 New York time. So how many? We have Atlas line gave one main signal, and then it's, I'll expand it out. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 signals for the Atlas line by 12 o'clock. And for the trade scalper, there was 1, there was 2, 3, 4, 5, 6 or 7 for the trade scalper. So a lot of signals, and definitely, like I said, filter them out, right? If you have the trade scalper and the Atlas line, if you have them both, maybe just focus on the signals where everything aligns. So as an example, here's a really good opportunity where you have pullback trades and the trade scalper at the same time. Not that you have to do that, but again, it just works out where it's a stronger intention to go short on that. Lean hogs. It's been a long time. You know, Steve, the markets that I used to really trade years ago were coffee, soybeans, well, these are futures, right? So coffee futures, soybean meal, soybean oil, soybean futures, natural gas futures. And I used to look at the commitment of traders reports every 2 weeks when it came out. And so, you know, as a trader and working in the industry, you know, you look at what all the professional traders are looking at that time. So in that time, 20 years ago, you know, the commitment of traders reports would come out. We'd have to follow them, right, to see what we're doing. And it would be really coffee futures, soybeans, and natural gas. That was the go-to markets that I used to really trade, Steve. But that's another error. Okay, so we're looking at Sal, right? He wants to see daily. So let me go back to daily. So daily charts, I was showing everyone SAT. I believe it's SAT. I was showing everyone here the blueprint. And the blueprint is more of a swing trading. You can definitely use it for day trading as well. It works the same way. But this is what we have for swing trading. So hourly, daily, weekly, stocks. Again, it can be used on a 5-minute or 10-minute hourly. It works really well for long term. So the way this works, I know you just got here in the room, is that the blue shaded boxes, and this is the blueprint software, it first looks for some type of a trend up or down, and that's why the boxes are blue or they're red. There's a trend, a sort of trend to the downside, and so on. And once that happens, what it looks for is the market to stop and stall, because support and resistance, the market gets stuck, the market, or a couple of days of it maybe taking profit. But where we go from that point forward right, is important, because I don't really know if the market, like for example, if you take, I'm going to see if I can remove this here. I can't remove it. So if you take this here, I'm not a mind reader and I don't have a crystal ball. The only thing that I know is the market is either going to go down or it's going to go up, right? Frankly speaking, this is the only thing I could expect the market could do, unless it just goes sideways forever, which it won't. So from this point forward, the software looks for opportunities. First, it looks for the distance. Will the market continue higher or lower? And when that opportunity exists, does it happen too fast? Am I entering overbought, oversold, which is no good? So there's a distance factor involved. I want to enter as close as possible to this shaded area. The second thing is, how many candles does it take to prove that it's actually doing it? Because I don't want a false breakout. Now for day traders, 1 minute, 5 minute, 15 minute, I recommend 2 or more. 2 is fine, because I need that proof, that evidence that the market is going and continuing in the same direction. As a swing trader, day charts, daily charts, weekly charts, you just need 1 candle, 1 bar. So in this case, we have the first candle closing above, and the distance between where this candle closes and how far it went, and this is minimal. That is a good thing. So this is the beginning of the move up that we want to be in. We don't want to enter here, and for example, this signal here I think is too late. So how do I adjust this, right? So this is the shaded area. This is 1 candle closes below. How do I adjust that? Well, previously before you came, I showed here the back end of the software where you can actually indicate the maximum distance the market could move. Here is 1. 1 is a multiplier. So this is the area. I don't want the market to give me a signal if it's moving more than 1 times the distance. Leroy, one of the trainers here at DayTradeToWin, he tested the software. And you know what he uses? He told me, he said he does classes almost daily. You know what he told me? Half. If you enter, there's going to be less signals, but they're much more accurate. When you enter, when the market's just beginning its move up or down from these shaded areas of support and resistance, with just 1 bar, it works out really well. Now, I haven't tested it. I know that 1 works really well. You get less signals with the smaller the distance. So 0.5 is what he recommends. He loves it. I use 1. And so when I do that, I click apply and OK. You see there's no signal because the distance between here and here is too far away. You don't want to enter this far away. We want to enter as close as possible, like here, or like here. This signal indicated right away to go short. Right away. As soon as it broke, right away. Let's see if there's another one here. Right away. Here's the shaded area, right away. This one, even here, if you measure from here to here, you see, it's less than 1 times multiplier. Makes it worth the trade. But had this candle close like this, not worth it. It's too far away, oversold, overexhausted. Typically large candles, they reverse on you. And that's part of the software. It's built in. All right, Sat, let me know if that makes sense to you. For the minis, Mary, and mini NASDAQ, it's the same. The ATR with a setting of 4 is universal. So whether you're using a 1-minute chart, a daily chart, micro NASDAQ, regular NASDAQ, it is the setting of 4. Mary, over here, look, right over here. ATR, setting of 4. All right. Anyone have any other questions? Yep, I'll put the recording on the blog. We have a blog at DayTradeToWin. Now, I also just, so for those of you who entered late here into the room, if you come here to the home page, this here is an opportunity for you to get a free member account. So you can put in here your email. We send you a login. You create a login and you get a free member account, and there's a lot of, or this here as well, same thing, just a pop-up. And this allows you to get some free things. The news indicator, the ABC indicator, there's downloads, there's some videos, there's how-tos. So we try to get some upfront information before you decide to either go with mentorship, or if you want to buy the Atlas line or the blueprint, you have a free member account that you can get to know DayTradeToWin a little bit before moving forward. And if you have any questions, you can always send us an email or give us a call. We're happy to make sure that these programs are right for you as well. But the recording will be on the blog, which is right over here, blog. Okay. All right, everybody. Hopefully you guys learned something. Be safe out there. I will see you guys at the next webinar. I'm happy to give you guys a call if you have any questions, and I'll talk to you soon. Take care, everybody. Thanks, Steve. Bye-bye now. If you're new to day trading and want to learn more on the benefits of trading the markets, visit DayTradeToWin.com, join the next mentorship class starting later this month, and subscribe to the DayTradeToWin YouTube channel. We focus on price action and work exclusively with new and beginner traders who want to learn more on how to prosper from trading.